Hey traders, this is Houston Trung from thetradingedge.org, and here is your weekly market outlook for March the 9th to the 13th, 2020. So, in case you missed it, it was another wild and volatile trading week. The market continues to be buffeted by the coronavirus news, and the volatility is still very high. So, the good news for the buyers is that Friday ended very strong. So, the question is, was that the bottom? And we'll talk about that in this week's video. So we'll get into the charts in a few moments. We'll talk about the week that was and what sort of tea leaves left for the coming week and weeks. Now, onto the econ calendar. Fairly slow news week in terms of the econ news. But again, it's all about the coronavirus right now. So everyone's eyes are on the number of continuing cases, or the amount of unfortunate fatalities, and that seems to be what's causing the continued sort of negative outlook on stocks and the global growth story. So for now, in terms of the econ calendar for North America, or the US specifically, pretty quiet news week. Wednesday, we got the CPI number before the market opens at 8:30. Oil number at 10:30, so that's another one to watch because oil has been getting really crushed here, down. We know we're talking multi-year lows now, which is good for the pocketbooks and great for gas prices, but definitely some oil names probably going to see some credit events here, as some of these companies who maybe are leveraged will probably end up having to get swallowed up or go out of business. Thursday, we got jobless claims 8:30 and PPI at 8:30, and that's pretty much it for the econ calendar. Slower earnings calendar as well this week. Nothing really picks up. We got a few interesting names on Monday. Things like SFIX, if you want to trade names like that, are interesting to watch to kind of gauge the retail sort of consumer, sort of the online retail consumer. Then on I think Thursday kind of picks back up again. We have over 100 companies reporting, in names like Inovio, which is one of the companies who is trying to create a coronavirus vaccine. So they announce earnings that day. That'll be interesting because that thing has been a real high flyer. Adobe on Thursday as well as Work, which has also benefited somewhat from the from being a kind of a remote collaboration software. Oracle's one to watch, and DocuSign, another high beta flyer. And if you want, look at Gap, GPS on Thursday, as well as Dollar General. Excuse me, those are interesting names to watch, just to see how things trade. So, as usual, as I always say, make sure you understand what positions you're taking on before earnings. There are still earnings names out there you need to watch out for. So, double check your earnings calendar before you carry stocks overnight. All right, so let's get into the charts now and talk about that week that was, because man, there was a lot of stuff going on this week, and to be very frank, the environment we're trading in right now is very volatile, and it's very technical. So this is the type of environment where price action traders can really thrive, because the news is let me just close this window on the side here. The news is what it is, and it sort of trickles out, and the market needs time to digest that news. And the way the markets digest that news is through the price discovery method. And if you're good at understanding price action, you're basically interpreting how the market is reacting to the news in real time. And that's the benefit of understanding price action and being able to read bar for bar what is going on. The gist, or I guess maybe the counterpoint to that, is you don't want to be so entrenched in the bar-to-bar action that you lose the forest from the trees. So sometimes people get way too micro-focused when there's volatility, and they start trading, let's say, like a minute chart, right? And they get lost. They see this downtrend. They think, well, they see this downtrend the last hour of the trading day, and they think that and they lose focus of the bigger picture. And the bigger picture is obviously that the VIX had a really massive week until Friday, the last trading hour of the day and of the week. So let's get into the charts now and talk about the week that was. So let's begin with the VIX. What else can we say? Man, VIX has been has really exploded, and we talked about this, right? As soon as it went above the prior month's high when March, remember that last week of February, when it broke above Jan's high, that was a red flag if you were long equities, because you had not seen that previously since way back here, right? Way back in August. And so you had 1, 2, 3, 4, 5 months where we had lower lows. And then finally, last week of Feb, it was a bit unexpected because it was a very big range that had to cover. But as soon as it did that, that was a red flag, and you had to be aware that this, not necessarily it was going to play it like this, but ultimately that something like this was possible, because that's a pivot, right? So that now we're up 30% for the month of March. We had a plus 40% for the month of Feb. So all in all, up 70% for the past couple months. So volatility is certainly trading quite high at this time. On the weekly chart, green week, another green week. So you can see here on the VIX chart, now we've gotten back into the broadening formation. The other thing with the VIX now is we're going right into those highs, and we are in the Bollinger Bands. So it has to keep going at this point, otherwise it's going to pull back. And usually when VIX pulls back, it pulls back quite aggressively, because it's, as I've said in previous videos, it's very difficult to keep fear elevated for long periods of time, because from an actual market participant psychological perspective, this means that the participants who are buying VIX, they have to be, or the opposite, there has to be a fearful state in the markets, meaning people are on the verge of panicking and they're willing to buy the insurance, because the VIX essentially, is a ratio between, I'll really dumb it down, it's not really like this, but in a simplified way, it's basically the ratio between the puts and calls. So when there are way more put callers than buy callers, then you're gonna see VIX elevate itself. So that's what you're seeing now, is that there's a lot of people buying puts, and that's what's causing the VIX to fly to the upside. And so now we're coming back into the range, and let's see how it goes. Right now, you're not going to see a reversal. So again, I'll get this with the indices. But here's the thing. On the weekly chart, you're not going to see a reversal until this prior low gets taken out. All right? So remember, this is very simple price action, but it's very effective because we were in early, right? So here, when it broke above, back here, the second week of Feb, that was already a red flag. Remember? So this is the last week of Feb where it was when it broke above the month's high, the prior month's high, but we were already alerted a week prior to that when VIX did this innocuous, seemingly innocent down up scenario. But that's what started it right there. That move right there. You could actually argue that it started here with the outside up, right? But it got negated when it came down here. But then did a reversal here. And here is significant because once again, you're above this blue line, the quarterly open, closed above it, and the following week pow was gone, and that's, at this point it's no longer time to short VIX anymore. If you get short VIX here, you're gonna get run over because that was a plus 53% move. All right, it's no longer the time to be a VIX seller because you're gonna basically be collecting pennies in front of a steamroller. So that's the scenario with the VIX now. You want to see this coming week. If it doesn't, keep doing the Bollinger Band walk, and it could, or it maybe doesn't. Then it could come back into the range again. If it breaks below this week's low, it's coming back down, and we have some unfilled gaps to the downside now. On the daily chart, it's pretty straightforward. So on Monday, the sellers on the indices sort of let their foot off the gas a bit. So people were a little hopeful on Monday that things were kind of that had peaked already. But on Tuesday, volatility basically woke up again, and it became elevated once again. So basically broke back above this line here, which is the monthly, right? That's your monthly and weekly open. So this is the brand new week, okay? Brand new month. We've had traded below there. This kind of looked like a shooting star a little bit, or inverted hammer, however you want to call it. And then here, the buyers, it started down here, right? So it was a small gap below that bar. There was a gap down. They bought it right back when it came down here, and then they closed it above that high, creating the outside bar. Wednesday, fairly quiet day, but outside inside. Outside inside, we know that pattern. Which way is it going to resolve? That's what you want to wait for to the upside. Thursday, you have no option but to be long, right? Because that's a continuation move. And then Friday, continuation of this pattern, outside inside. Because we know here, imagine if you're trading inside this bar, this outside bar causes participants on either side of this bar, if they're putting stops there, to get stopped out. And so if you do want to participate in this move, you have to chase price. Now in this case, you don't have to chase because the next day it's an inside bar. But this means some folks who are short, they may not have covered because you're like, okay, well, I'll put my stop up here above this outside bar because this is an inside bar, right? And if I break down here, maybe I'll cover, maybe I'll get to keep my short on. But in this case, if it breaks above here, they're immediately going to go after that pivot. So it's really not a good idea to keep your stop above that high, because they're going to immediately come after you as soon as it breaks above there. You might as well put it there. There's no point to put it up there, because if it breaks above here, they're definitely gunning for that area, right? So that's what happens. They immediately gapped it up, takes all that area, stops anyone out who doesn't, and then if you don't cover your shorts, you get squeezed. People buying aggressively the VIX. So the VIX now, this is what we want to be watching for on the 4-hour chart. We got an outside bar to close the week, to close off Friday. So as we always do, we're always looking to see what's the next bar after that outside bar. Very, very significant. And if you recall what I said last week, we also ended last week on an outside bar. So we want to know what that next bar is, okay? Because it kind of triggered this whole thing. So we'll show you in a few moments here. But let's talk about the SPY now. So let's go to SPY. Actually, before I do that, let's go back to the daily chart. VIX is, SPY and VIX, and I'm not going to belabor the point, because you can always go back to our previous videos and you'll hear me say how the market was on a shaky foundation. We had poor market structure below it. It was a combination of people chasing because of outside bars and because there's lots of gaps. And now what the VIX has done is basically it has filled a lot of those gaps. So here, this week where you open up here, there was a gap right here. Okay, so that got covered here. There was a gap right there, and it got covered, or got filled on Thursday. So we can go ahead and delete that gap now. That's a filled gap. That's that green line. Then there was another gap right here. See, way back here, August 19th, it gapped over it, so that got filled. So that gap is now gone. Then look at the final gap up here, 32.45. Where was that gap from? Way back here. Now we had, so here we go. I had this on my charts, and that was back in May of 2019. So it took a while, right? In May of 2019, nearly took a whole year, around 10 months. But that gap, 32.45, is now filled. Okay, so this thing was basically doing a Bollinger Band walk. So you get Bollinger Band walk, pulls back a bit, okay, and then pops. It doesn't break below, comes back up again, and you're deep in the Bollinger Bands. If you break back below here again, you can expect it to come back down at here again, unless it does a consolidation. It keeps going. If it has an inside bar on Monday, right, something like this, then it can keep going higher. But if it breaks below this low, it's coming back down and come back in. Okay, so like this here, it came back in, but it consolidated on the Wednesday, and then it pops back up again, continues the Bollinger Band walk. Okay, so let's see if there's any more immediate gaps. 32.45 was that big one here, right, that level. Here's another one right there. No, that one got covered already, or filled, excuse me. And we have another one here. If the markets really want to gun them, so this looks like 38.65 area, 38.672 area, excuse me, 72. We'll mark that one in our charts and carry that one forward for the future. So for now, we do have downside gaps. So we have a gap right here. Okay, we have another gap. I'm just going to draw it in here. We have another gap right there now. Closed right there. Had a gap. We'll delete this blue line. Okay, and the weekly opens way down here, that purple line, right? So that's what, in order for there to be a weekly reversal, price will have to come all the way back down here through here again and break below this prior bar's low. This bar's low right there. So it's kind of a hard task to do. Not possible, because the markets are moving very, very with a lot of volatility, a lot of range. But again, let's see what happens here, if we can pull all the way back through or not. I'm not seeing that right now, but again, you want to be open to the possibility that that could be possible. But ultimately, we respond to price. We're not trying to predict where the markets are going to go necessarily, because we don't have to. That's the easy part. The prediction game is a very, very tough game, because if you have predictions, then you have set rigid beliefs about outcomes. Here, the game is to be responsive to price. And so, yes, you don't get to brag to all your friends about how you nailed that, call with, oh yeah, VIX is going to go to 33 exactly, or whatever that high was, 32.68. But at the same time, it doesn't really matter, because as traders, that's not how we get paid. We don't get paid to make predictions or calls. We get paid based upon the correct, based upon being able to find repeatable patterns that have an edge. And so that's ultimately what's possible if you simply respond to price. You don't have to lead price. You let price lead and you respond to price. So let's talk about the next chart now. SPY. SPY. Let's get in here. Okay, so SPY now, what do we have? Even though it's been a volatile month, as volatile as you think it's been, we're still inside month. Okay, so things have not hit the fan yet, so to speak, because the markets did not break all the way down yet. It was a bit of an ugly open on Monday, but right, the buyers actually stepped up for most of the week until the Thursday and Friday. It kind of fell back down again and came back up. We'll talk more about that in a few moments. But right now, outside, inside, you really want to know here what's going to happen if this low gets taken out. So here, that low right there, if this low gets taken out on either side of this range, you want to see how this range breaks. Is it going to go outside bar down? Is it going to stay outside inside? Does it go outside bar up? Or a variation would be it breaks one side of the range but comes back in again, right? So those are the only things that price can ever do is one of those situations or one of those scenarios. That's as easy as that. Once you get that, it gets a lot simpler because it all becomes just Lego blocks. So right now, outside, inside, which way is it going to break the prior month's range? That is the forest, right? So right now, outside, inside, things are not breaking down yet. And look at the week. As big as that range was, it wasn't as wide as the previous week's range. Anytime you have a huge range like this, remember 2 weeks ago? Not this past week, but 2 weeks ago, it was a huge range. S&P was down 11%. This week we had a lot of volatile days, but ultimately you didn't cover the same range, and you could not break outside of the prior week's range. So now it gets interesting, right? Because now you have that inside bar. That is what's significant now. This is now it becomes interesting because you can see that line in the sand, where the buyers and sellers have met and where they've had a stalemate. Whoever can take out either side is going to be the winner of that price action battle. Not only do they have to break above it, but they have to stay above it, right? So it's not enough to say, okay, it goes outside bar down. If it doesn't stay down, it's going to come back up again, right? Because that means it's a fail. Now look what happens here. It goes down, breaks below the Bollinger Band, pops back up again. Inside bar now, right? Not doing the Bollinger Band walk here. This is not the Bollinger Band walk because you're not closing below the Bollinger Band. But right now you're seeing that, this level here, there's been buyers in this level. What's the next bar, right? It's an inside bar here now. So how does this pattern break? Okay, is this simply a consolidation and bar and you get continuation to the downside? You will know that if it breaks below that low. Or is it a reversal? Because it very well could be. It's possible. If it breaks above here, the issue here is that you have the quarterly open right there. That could be an issue because the quarterly chart will look red until that level gets taken out. Because right now, if you look at the quarterly chart and how much time we got left, 53 days left on the quarter. Okay, this is what the quarter looks like right now. Sorry, that's a 3-month chart. Sorry, 4-month chart. I hit the wrong button there. We have 23 days. Yeah, it seemed like it was too much for the quarter. We have 23 days remaining roughly in the quarter. All right, so it's still a red quarter. So until it can break way back up here again, you're going to end up with a red quarter. The question now is, it remain a red quarter like this? And technically, this quarter for the SPY, anyways, no, I'm not talking about the rest of the indices, has not broken below the prior quarter's low. Okay, so this low is still higher than that low. If we break below the prior quarter's low, that turns into an outside bar, and then it gets very interesting again. Regardless, well, we'll talk more about this when the time comes, but you want to be using the exact same principles that we've been talking about to do the analysis on the quarterly chart. What's the next bar in Q2? Inside? Does it take out one side of the range, or does it start down one here and come walk all the way through and create another outside bar, which is a possibility, although a lot more rare, especially on the quarterly chart. So let's go back to our analysis here. As you saw in the SPY, we've now broken below this broadening formation. So for a while there, we had stayed above it, and now it's come back. And now the question is, can we take out some of these pivots? Like that pivot there seems to be a very, very obvious one here. And it came close, right? Came close in February into the end there. But they bought back right back. But still right now, inside month. Okay, so week, we got the inside week. And on the daily chart, here's how it played out. Here's the interesting part so far. All right, so if we measure things, I'm gonna go to a higher time frame chart for a second just to make it cleaner. So if we measure this recent move, so let's go to the monthly. Actually, let's do it here. Okay, let's take a simple Fibonacci tool here, and we'll draw from the peak here to the low right there. All right. So I don't know if you can quite see that. I'll zoom in. That little gray line, it's kind of a little bit, I'll make it a little darker so that you can see it more clearly. Let's draw it as a black line. and 50% level. Let's make that dark so you can see that better. Okay, actually I'll make it less dark than that because that's a little bit too dark now. Okay, there we go. So you see this level right there? Here, the 50% right there. Look, it's right there, so it tagged it. Okay, so basically at the end of February, and we're still basing right above it, it did a 50% retracement. So for a lot of technical traders, they're looking at these significant Fibonacci levels. The significant ones are, if you don't know fibs, 38.2%, 50%, and 61.8%. Yeah, some folks look at the 70-something% one, but that is more for really bearish cases, and I think less people look at that. But the more general ones are 38.2, 50%, and now the 61.8. So long as you're holding below the 50%, some market technicians would say that's still bullish. So you still have some folks holding on to that bullish bias. You're waiting to see this break below here now, below the 50% level, before we can start getting down to these levels here. But so far, the buyers stepped up to defend some of these technical Fibonacci levels. All right, so enough about Fibonacci's. I just thought that was a curious observation that I've seen on the internets. So here's how we see in the price action wise on the daily chart. This is what was playing out, and I was calling it out in the chat room that I have during the week. I said, if this is going to if you want to cause shorts to cover, you have to do one of two things. First, you're gonna have to close. So remember, you opened up Monday right here, right? So this looked like the buyers had stepped back up. Things had maybe it felt like the news had eased up in terms of the coronavirus story. So the buyers stepped up on Monday. All right, the VIX kind of came down, and then the 8-period moving average is right there. I was looking for a close above the 8, right, and then a subsequent break above that 8 that close high, right? So if we finally got a close above the 8-period here on Wednesday. So had the buyer stepped up and be on a break above this high here, this would have caused many moving average traders to either tick off the shorts or perhaps begin to looking to get long. Certainly to tick off the shorts because they're using trend following methods to manage their trades or their trilling entries. So it did not happen, right? So here, what ends up happening is you get a close above the 8, and you get a break below that. So that's basically a sell signal because this ends up being just a simple pullback, impulse, pullback, and impulse again. So A, B, C type of move. Friday they did not have enough juice. Technically, if you want to see this thing work out, is they want to see this prior low to get taken out. So some people are still short in this sequence because they sold this pullback here when it broke below there, or anywhere in this region here, because they found that moving average touch, or they're using Fibonacci's and they're looking at this retracement area here, and now they're looking for things to come down. Price action wise, it's a good short right there, right? It's a good short right there. The only issue I don't like about this short, so this is what's a little tricky right now, is you don't have full time frame alignment for the SPY, right? So here's your quarterly open. I mean, just run the quarter. We know that already. But because the month opened and the week opened there, for most of the week, you're trading above the weekly and the monthly open, that orange line. Okay, so until you break below there, which happened on Friday, you did not have full time frame alignment. It finally happened on Friday. Friday was mostly bearish, except for the final trading hour of the day, where we'll get to that now. Let's talk about that. The final trading hour of the day, and let's talk about that here. Actually, before I do that, let's just finish the story. So we broke below there, we come back in. This black line, that's also the 200-day moving average. So this is the 200-day EMEA, not the simple moving average, but 200-day EMEA would be around that area. So for now, we're actually trading below the 200 EMEA. See how it came down, tested some of these moving averages, and now we're trading below that 200-day as well. So not to mention, you have full time frame alignment with the downside. Even though Friday's close was strong, you're still below that, that weekly monthly open and below the quarterly open. So as strong as that was, possibly it was just short covering. All right, so now you really want to see what happens next. Here, let's take a look at it on the 4-hour chart. All right, let's bring it up here. There we go. So there's our 4-hour. Okay, so now we got an outside bar. What's the next bar? Okay, so what's the next bar? What's that going to look like? On the 60-minute chart, look like this. So it was a big ripping bullish move, but only the last hour of the day, because prior to that, the bears had mostly the control over the day because it's trading below the weekly open. Although you're trading green for most of the day because it's above this little blue line, that's where the day opened. Finally, at 2:30, you broke below that daily open, so it turned the day red. Okay, you created a weekly low. Then the last trading out of the day, they bought it back because here it runs out of momentum. It goes outside bar, down, down. As soon as you break back above there, you turn the day back green again because there's your green line and there's your reversal. You're going to go after that pivot there at the very least. And here instead, they actually go all the way back and test that weekly, monthly open. They couldn't quite turn the week green and the month green, but it was enough. Don't forget, right? This is what we're always talking about, seeing the forest through the trees. It was enough to cause this doji, right? So it's a very small, looks like an indecisive week, but a huge range. Okay. So on a lower time frame chart, if we look at that, if I recall, maybe a good time frame to look at that would be right here, the 10-minute chart. I think the 10 and the 15 offer the same picture, but yeah, it's the same thing. So here, the 15, here's 2:15. I'm just gonna move this out of the way so you can see the time. So here we go. Let me see if I can zoom in. So 2:15 right here. Momentum down, 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 right there. 3 o'clock right here. Okay. At 3:15, they break it above. This extinguishes the momentum move to the downside, and immediately they go after back over these pivots, and there's your monthly, weekly open. So that's what it looks like, where you have the chance of short covering going into the weekend, right? So if you're short throughout the week or in the past couple days, and now it's hitting weekly lows, now you're sitting on your chair or at your trading desk thinking, do I really want to hold this over the weekend? And sometimes the market forces your hand, right? If you're sitting on a good winning position, then sure, you're gonna maybe take your chance at hoping over the weekend. But when this starts to happen and it starts coming back through the range, and you quickly see your profits disappearing, especially if you got short intraday, intra-session, then this will force you to cover your trades if you didn't get a good trade location. All right, so just to wrap things up with the SPY, one thing to point out too, as I said in the beginning, here, the 60-minute, remember last week? We really wanted to see what was going to happen coming into this week because the last hour of last week, if you recall, was an outside bar. It went outside bar to close the prior Friday. This week, it wasn't an outside bar, but you had the same type of strength, right? So here, the prior Friday, it went outside bar. On Monday, coming to this week, I was simply watching this. What's going to be the next bar on Monday? It was outside bar up. This is how simple the trading was. We had 1, 2, 3 consecutive. So for the first 3 hours of Monday, it was outside bar and up. People were getting short in here, trying to break it down and go short again. But so long as these lows held, we didn't get any kind of violation of that until this sequence here. You had a lower low, but that wasn't until noontime, right? So the first 3 hours of Monday this past week was quite volatile. You don't see that now because of these bars. They look very innocuous. They look very simple to understand. But in real time, when you're trading that open on Monday and all that news is coming out and you don't know which direction it's going, you want to simplify things because it's telling you everything. These hourly bars, even though they're kind of wide, especially the second hour here, they're not breaking below the prior bar's lows. All right, so trading doesn't have to be that hard if you sometimes take the time to zoom out a bit and not get too micro forced and get stuck in those trees. Now, the Wednesday session was the one that's kind of problematic for some traders because Wednesday, if you recall, was this day here, Monday, Tuesday, Wednesday. Wednesday there, right? So that was this session here, Monday, Tuesday, Wednesday. On Wednesday, it looked like a pretty good close, right? But it was actually an inside day. So that day right there is actually an inside day. We closed near the highs, but it was an inside day. It wasn't as bullish as it looked. This is always dangerous. When you have a situation like this, because on Wednesday, it goes inside bar up, inside, up, up, up. That's continuation. Okay? Into highs. Hits the Bollinger Band. Where's it going to go from here? Had no choice but to go down. Unless it's perfection and you have nothing but the narrative and the story and the news flow continues out to support this sequence, you're likely going to come back through the range again, right? So anyone here who got long, they get stopped out on Thursday, right? So if you buy and you put your stop anywhere around here, all right, that whole day, you get stopped out on Thursday, Friday. Okay, so on Monday, this coming Monday, what to look for? Well, you want to see once again, does this monthly level hold? Do we trade above or below it? We trade below it, you got full time frame alignment with the downside. Okay, and simply watch that 4-hour chart. We got that outside bar. This is going to slow things down a lot, but you got that outside bar. If you're if you're struggling with the direction of the markets, where are we trading in relation to this outside bar? Okay, and the weekly, monthly open. Okay, that's now we can go a little faster because the rest of the charts look very, very similar. The nice thing is that when you trade volatile environments like this, the correlations become very, very high. And so it really doesn't matter for the most part which instrument you trade because the correlations are there. Obviously, you want to pick the one that's moving the best and has the most potential. But in terms of the analysis, they look very, very similar. All right. So here for the Qs, outside, inside on the Qs. Still outside, inside. On the weekly chart, even more apparent here. It's basically an inside bar for the week. Once again, we're watching to see how this range breaks, sitting right below this quarterly, this monthly open. So for the Qs, same sort of thing. It went all the way up to test that 8-period moving average, and then it goes inside bar down, down, still trading below that monthly open now. Okay. Also, the Qs, it did test the 200-day moving average right here. Okay, last week, came back down again, came close to tapping it. But this one here, the Qs, is actually trading above the 200-day. So unlike the SPY, still trading above it. All right. Now, on the Qs, same thing to watch for. 4-hour chart, it is a outside bar. So what's the next bar on that 4-hour? Because that's what we have on the 4-hour is an outside bar to close off Friday. Because this may look bullish, but if they go outside bar down, obviously that negates that whole picture. If it goes outside bar down, it's actually momentum to the downside because anyone who bought this on Friday thinking, yay, we get the upside move, will be stopped out and they're going to be forced to go short if they want to catch this move to the downside. Because this is potentially would be, right, if you break below this low here, that will break the inside week, right? So that's significant. This is why this is an interesting bar because if you break below this outside bar, this will trigger the weekly inside bar to the downside, okay? So don't forget that. Watch for that 4-hour. Dow, very, very similar. A little bit more bearish though. Actually, sorry, a little more bullish on one front, but not that much more bullish. So for monthly chart, outside, inside right now, keep it simple, red quarter, okay? Weekly chart, inside bar, like the other indices so far. So we'll draw our levels in there. Okay, want to see how it breaks this range. Because if you stay inside that range, it is chop. Not necessarily chop because you still might lots of opportunity to make money because the volatility is high, but you can expect there to be chop because that's the nature of trading inside bars. The good thing is that it's a very, very big range, so you can still make money, but in very tight scenarios, inside bars can be very tricky. Now on the Dow chart, pretty much the same kind of picture again. It was this here, all right? All the way down, comes back up. Here's your 200-day moving average. Did not quite test it. So basically now you're trading below the 200-day. You had a test of the 8-period, came back down again. Here, small bullish thing for buyers is that they did close above the weekly monthly open. So in the month and the week, it currently looks green. That's pretty much the only bullish thing so far is it looks green. Recall what you need to do for this thing to be a reversal on the weekly charts is you have to take out this high here. So price has to come back up here. Okay, take out this high. There's actually a gap right there. And then break above there, stay above there to cause that weekly reversal. So that would be very, very interesting if the buyers can do that. If they can break above that purple line, that will cause the weekly reversal. Russell now. Russell, okay, the difference between the Russell and the rest of the indices is it never had that outside bar in February because it was never strong enough to actually break above January. Okay, so since Jan, you had this up, then down, down sequence, taking all the lows down here, right? So it took all those lows, and now you're at the other side of that broad information. So this broad information we drew a long time ago, we touched that top, we touched that other side, right? So higher highs and lower lows, tricking everyone in this sequence, right? So that's going to look like this. On the quarterly chart, it looks like an outside bar. Okay, look at last week's video if you want the explanation on why outside bars are fractal broad informations. So, there's our outside bar. Took it all out. And now what happens? Can you stay below? Can you break below this broad information? If not, expect this to come back up here again. Maybe test it go down, or if you get a reversal on the lower time frames, on that weekly, for an example, maybe it comes back up here again. But that's it's still a long ways away. Weekly chart. This one did not do an inside bar. So unlike the other indices, Russell actually had a lower low. So in order for Russell to have a weekly reversal, you got to come back up and take out 154.20. So a little far away there. So kind of a tough call. But the Russell definitely the most bearish out of the bunch. Full time frame alignment to the downside. Okay, so there's your quarterly open way up here. Here's your monthly, weekly open right there. There's your 200-day right there. So everything's trading below those levels. It's full time frame alignment to the downside. This thing broke below 200-day way back in Feb the 25th, right? So a good 2 weeks ago. Has not even come back testing it. So broken down and staying below. We got some unfilled gaps here now. I'm going to delete this one. That has been filled, excuse me. We got a fill there, so we'll get rid of those. Actually, I'm going to put it back in here just to mark where we have some unfilled gaps. So here's an unfilled gap right there. Okay. All right. So that's what we're going to watch for the Russell now. Just like the Russell. Here, it's momentum to the downside. Okay. So here it went inside, outside bar down. Friday, outside bar down. Okay. So now on Monday, can you get above Friday's highs? If you do, that will extinguish this downside momentum on the daily chart. If it just keeps going down, then that's momentum to the downside. So now you're looking to see, can Friday's highs get taken out? Otherwise, you have downside momentum on Russell. This may look significant for buyers, but if they don't continue to step up and take out at least Friday's highs, and the sellers can somehow overwhelm them and take out Friday's lows, watch out, because we're going to keep going lower. Okay, so watch out for that level. Russell. Let's talk about TSX. TSX also having a red week so far, a red month, but outside inside like the rest of the indices we talked about. So outside inside right there on the monthly chart, weekly chart, just like the rest of the indices other than the Russell, inside weak trading action. Big ranges, but still, to be objective, that is a inside week. Let's mark that level there. Okay, so how does that break? So TSX, inside week, exactly the same pattern as the rest of the indices. Okay, impulse move, pull back, doesn't quite touch the 8 period in this case here. Could not quite touch the 8 period. This actually here is a 5 period. Like if you don't see it drawn in, but if you can imagine what a 5 period would look like, it'd be around here. Okay, and it comes in here, touches the 5 period, and it goes inside bar, down, and down continuation move. So bit of a hammer on Friday, but once again, that may not be significant until you can begin to break out some higher levels. Okay, so let's talk about emerging markets. The interesting thing is that some of the emerging market names, well, it looks like the cases in China, there have been fewer and fewer cases reported, and so now it looks like the reported number of cases is slowing down in China, but obviously rising rising across the rest of the earth, across the rest of the world. So you will see here that some of the Chinese names I'll talk later on have actually started to outperform. So that's something to watch for. But right now it's an inside month, so we have not broken below Feb's lows. Okay, so outside bar down, inside. This is still momentum to the downside until proven otherwise. So on a monthly chart, you need to see that high get taken out, okay, before this momentum shifts. Weekly, inside bar, like we saw with the rest of the indices. So inside bar, there you go. How do you break out of that this coming week? And the EM looks a lot like everything else. Comes up, I'll delete some of these gaps here, these green lines. Comes up, taps the 8 period, goes inside bar, and inside bar down. And now you want to see, can you break? It's supposed to, the way these patterns are supposed to work is you're supposed to get this level touch tested. If it does not get here, okay, this will form a lower low, a higher low, and you want to be aware of that. You want to know that, because then people are holding out, trying to get this prior low. You know, they're looking for the double bottom, or they're looking for a lower low. If they don't get that, and price begins to move back up again, and you get that weekly reversal that we signaled here, the inside bar, it breaks back above there, then you will have known that people are trapped. Okay, so that's how you're gonna know. Okay, let's talk about TLT now. TLT having a fantastic month, up 7% so far. Very, outperforming. People are rushing into the safety of U.S. treasuries. Look at the week it had there. Wow, plus 7.38%. And you can see here now, look at the volume on TLT. When's the last time you had that much volume in TLT? I don't know if it's ever had that much volume. Maybe way back here in 2011. Yeah, I'm just eyeballing it here. So that level there. Yeah, you have to go, even that's even more than that. So yeah, you're gonna have to, it goes back a while. And you can see here now, it's broken above that broadening formation, and you're going deep into the Bollinger Bands. So this is, you're really doing the Bollinger Band walk here. And you want to see how this ends, right? You got, if it breaks below a prior low, then this could potentially come back out of the Bollinger Bands and come correcting back into here now into the range. Okay, so very elevated levels for TLT. If you're buying TLT now, you're definitely chasing, because that's momentum. And what happens is that if you're the last guy out when you're trading momentum, you know, the last guy out was always wrong. So you're gonna get poor trade location, and you're probably gonna get stopped out. So here is a sequence that caused the last momentum move here. Outside bar, inside bar, right? So we love this pattern, the double outside bar, because you know what's happening here is that people are getting stopped out on both sides of the range because of the double outside bar. Some people went long and they got stopped out. Some people went short, then they got stopped out, right? Because they get this huge move. Then it happened again, right? Some people went long and they got stopped out. Some people got short, they got stopped out. Then it consolidates for a full day, right? So now, if you're sitting here and you just got chopped out for the last 2 days, and then the third day happens, you're like, nothing happens. Sometimes you don't have the trading capital or the emotional capital or the mental capital to get back into that trade again. And then finally it finally kicks off, right? Goes outside bar, inside bar. This day here only up 2.5%, and then the Friday was the panic day and they push it up 5+%. Lots of volume though, so that's an issue here. Way above the Bollinger Bands. So breaks below this low here, expect to come back into the range again. So TLT, what a move. What a move on treasuries. Okay. Let's talk about gold. So people, were they running into gold this week? Yes, they actually came back. It actually surprised me quite a bit because, you know, I was expecting it to be an inside week. For the most part, it was an inside week. It was an inside week all the way up until Friday, where it briefly broke above the prior week's high and then came back in. So for the month, let's just be objective. What's happening with gold right now? MGC, the micro futures contract for gold. I like this futures contract a lot. So this month here, for the month of March, we did have a higher high than the month of Feb. Okay, so right now, green month. Okay, green week. So we had an outside week the week prior, right? A lot of people got stopped out the prior week because of that huge range. It took up both sides of that, and if you wanted to get long in, you had to chase and get, only had to chase, but you had to get back into the trade. Okay, so now outside bar up, you need to see this bar's low get taken out for momentum to get extinguished. So quite the move there this past week, because we opened all the way down here. All right, it was a big move to take all that par bars high. So that's what it looked like on MGC. What it was this, right? So coming in on Monday, big selling bar on Friday. Right? We had a really big selling day the prior Friday. Goes inside bar. So that's basically a stalemate. So the sellers had their chance. They couldn't take it out anymore. The buyers created that stalemate, and Tuesday they stepped up and they turned on the gas. Tuesday, rip back above Monday's highs and just continuation. No lower lows. Even on Friday, no lower low. This high is only slightly higher than that high. But if you break below there now, you want to see what happens there. Okay, so these blue lines here, I want to delete that because that's not significant. But after you want to see, can they take out Friday's lows? Okay, so on the 60-minute chart, here's what you want to look for, because that Friday's lows comes into play here. On Friday, you had this to end the day, outside inside. So how does the outside inside on the 60-minute play out going into Monday? Even the 4-hour, you know, it's a very big inside bar and down move, right? So that kind of tricked people in the morning session. It came back up again to do an inside bar reversal. That inside bar reversal did what it had to do, that is, it took out all the prior pivot highs. Okay, including last week's highs. So just enough here, right? So the high there, right? Just enough to, if you went short, you know, you put your stops up there, it went just enough to stop you out. So now you got to see, is there a continuation or does it come back into the range? Just a couple more things, and then we'll launch into a quick fast fire of some stocks here. One is a Bitcoin, digital gold, as I've been fondly calling it. Bitcoin had a pretty uneventful week. You know, it was trading inside week, so let's take a look at the bigger picture. So on the 3-month chart, you know, we're still watching for this to see if it can reignite again, but it went inside bar down. These are quarterly charts now, right? Inside bar down. For Q1, it did briefly break above that bar's high. If it can trade back above 10,480 again, there's a very high likelihood we get back up here, 13,174. But so long as we're inside this range here, it's basically inside bar trading for the quarterly chart. On the month, okay, oh sorry, it's not the month. This is the month here. inside month so far, right? And buyers have to watch out that you don't get this low taken out. This low here, 84.55.1. You gonna, if they break below there, there's a possibility of a reversal on the monthly chart. But there's a quarterly open, right? It's gonna be hard to turn this quarter red. So you're gonna have a lot of buyers willing to step up until that quarterly chart turns red. Okay, so there's your monthly. Here's your weekly now, inside week. That's the challenge with any of these charts. So this is why I was thinking that gold was going to do the same thing as Bitcoin, because Bitcoin basically ended the same, like at the bottom end of prior weeks, opened up at the bottom end of the prior week's bar. Same thing with gold. MGC, we opened up close to the bottom range of the prior week's bar. How is it you're going to get a move to go from one side to the other side? It's very rare, right? It's not saying it's impossible, but it's not that common because it's difficult to do. So, and if it does happen, you'll have chances along the way to get in. But to try to buy that bottom and try to catch that top, it's a tricky trade. So instead, you just want to wait for it. In this case here, Bitcoin didn't do it, right? It's an inside week. So as much as, it's only up 4.5%, but to be fair, it's an inside week. That's objective as we can be. It's inside. And when you get inside weeks, you can expect to have a bit of chop. So here's your Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. I'll say again, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. So this is inside week because, by definition, it has to take out the prior week's high, which is up here, for it to not be the inside week. But if it keeps going, as soon as it gets a reversal, that's the kind of chop we're talking about. So it takes out that low here, Friday's low with an outside day today on Saturday. So here now, that was a good trade. Again, I actually did take this trade here, a very quick 2-hour trade. I bought this inside bar and went 2-hour up to here. Okay, so took some off there. Still long a bit of Bitcoin because we still have full time from alignment. Trading above the quarterly down here, the monthly, and the weekly. Nice reversal signal right here. Inside bar down, breaks above there, takes out that pivot right away on Monday. All right, so it's been going up since until this past day on Saturday, where it comes back in again, taking out some shorter term traders. Let's do one final crypto chart, Ethereum. Here's an interesting one to watch, right? So here's Ethereum. Let's bring ETHUSD. We'll bring in a bit Phoenix. So on the monthly chart, still holding on to its gains. So right now, inside month on Ethereum, so a little bit more quiet, but definitely far away from taking out the prior month's lows. So this chart here is probably going to, it would take a lot for this thing to turn red on the quarter, because the quarter is way down here. All right, and so long as you stay in here, you're still talking about a green month. Okay, so there's Ethereum on the monthly chart. On the weekly now, we can move our ranges. Here's what's interesting about it. You have a potential inside bar reversal here setting up on Ethereum. So back here, inside bar up, right? 1, 2, 3, 4, 5, 6, 7 weeks. We had higher lows and higher highs. Okay, now it finally broke outside that Bollinger Band walk. So I talked about it throughout the this video. If you break below this low here, you're outside the Bollinger Bands. This is what happens. Doesn't necessarily collapse, but I'm saying once you break below that low, it's going to trigger the stops of a great many traders, and it's going to force the shorter term guys who just recently got long to get stopped out. That causes this reversal move to happen. Now the buyers have stepped up, right? With the new month, the new open, that orange line, they stepped up right there at the beginning of the month, the beginning of the week. If you break above now, this bar's high, there's your inside bar reversal back to the upside again. We're after that pivot, then that pivot. Okay, so that's what you want to watch for Ethereum. Very, very interesting chart there coming into the new week. Okay, let's fast fire a few names now, and let's see where the money has been going. So week over week, I look at a scan that looks at a modified Sharpe ratio to basically see what markets and what stocks are trending, and both to the long side and the short side. So right now, this past week, obviously, beyond the easy names, right? So obviously we all know that anything related to Corona has been getting hit. So that means airlines, travel names, oil names, you name it, any related to travel or services related to travel has been getting hit. But here's some other names worth looking at where the money has been leaving. We'll talk about where money's been going in a few moments here, but where's money been leaving? Discretionary stuff. Look at Signet Jewelers. So it's starting to actually pick up the trend to the downside here. Signet Jewelers, you start to look as a potential very, very good short. Inside month, this thing breaks below there, right? It's going to get ugly for Signet. SIG. V-Ray, okay, so this type of company here, not doing so hard. 2 firm weeks now of red. So V-Ray, money has been leaving there quite aggressively, and it's starting to trend. Intel, all right, so semi is getting hit. Intel, very strong selling here. The trend is actually getting stronger. Marijuana names, right? So there is no bottom in these. Tilray, got the downgrade. I think it was Thursday, Wednesday or Thursday. Basically, that one analyst came out and said that they think this thing's worthless. Currently trading at 10 and closed near the lows of the day. So yeah, Tilray, yeah, this thing is a remarkable stock because, wow, how the mighty have fallen, right? Don't forget, this thing opened up here, 2305, got up to 300. So someone literally bought the 300 tick. Right, because if you can sell it, I mean, someone had to buy it. So someone bought Tilray at 300, now trading at 1002. So wow, what a stock, what a ride for Tilray. All the marijuana names are looking pretty desperate. The other one would be like APH, another marijuana name, Afria. The trend is very strong to the downside here. That means money continues to be outflowing, or shorts continue to flow into this. AMTD, okay, Ameritrade. Okay, is coronavirus good for brokerage houses? Doesn't seem to be for AMTD. And obviously, we already talked about all the services names related to travel and hospitality. But Caesars Corp, wow, they've been getting crushed. A bit of relief here on Friday as it ended up as a doji. But we know the story now. That has been a exceptional short side trade. That's a weekly chart there, right? Anyone who got involved in this sequence, they got a gap right down here. It's from June. It's possible now it comes back and fills that gap. Okay, so on the long side, we don't always want to end on a negative. So let's see where we can find some positives. Where is money going? Where are buyers? If you have to be invested in the markets, where are you putting your money? Well, it looks like money's flowing into what? Drug names. Okay, guys like this, Amgen. So Amgen, on Monday, bottomed here, brand new month, brand new week, and they bought it. So it's not a pretty pattern right now, but it's definitely they didn't let it break below the prior month's lows, and they kept the weekly open, monthly open. Drug names, right? So Amgen, Merck, right? So Merck ends near the highs of the week. AstraZeneca. So folks tend to gravitate towards these names as they're non-cyclical names. So the drug companies are usually not affected by cyclical patterns. People still need their drugs. So yeah, people buying into healthcare names right now, or specifically drug names. Vips. So as I talked about before, Vips is actually an online retailer in China, and it looks like the cases of coronavirus are slowing down in China, or new cases anyways. And so being an online retailer is actually not a bad place to be for the Chinese market. So Vips and JD, I think, is another good decent name. It's holding up to its gains, closing near the highs of the week. VIPS definitely held and holding up near the top of the week, so money going into that name on Thursday, Friday. TDC, so software trade here, so held the week. Interesting name, might be worth looking at. Look at a longer term picture here. You've had a lot of momentum on the downside here, but now momentum down. First green week in a little while, that has a bit of range. You can go inside week up, that will extinguish that momentum to the downside on the weekly chart. TDC. Two more names, or two more places to look at. First is things like staples. So if you take a look, people are going back into staples too. So we talked about the drug names, but even names like Procter & Gamble, right? A safe play. Walmart, safe play. Look at Walmart, closes near the highs of the week. Look at Walmart now, right? Nearly came back from that big down week in February. Look at that. It's an inside week, but man, they nearly recouped it. Down 9% the week prior. This last week, up 8.87%, right? So nearly recouped that. Still trading below the quarterly open though. So Walmart, people going there, and they also go to CVS, right? So these are all staples. So people are buying in staples, looking for safety there. So if you have to be invested, that's where people are putting their money. That means something like the XLP, right? The XLP ETF, you're looking fairly green, right? So for the week, look, so I know it looks like choppy stuff on the daily, but that's what it looks like on the weekly. It's a green week, all right? So hard to find some of these places on a trading week like we just had, but there's definitely some green places out there. Final one, another green place, right? XLU. So or utilities names. So Dominion being one of the constituents, All right, here, so green week for XLU, not a bad week actually. Look at the weekly chart. Outside inside now on Dominion. Outside, big down week the prior, then inside week up 11% this week. Now has outside inside resolve. That's interesting. Very big ranges though. So look at the size of those ranges. Those are the biggest bars we've had in quite a while. All right, you have to go back quite a long ways to find bigger bars than that. So the trick here is now is how to get outside this range. This could be another inside week developing coming into the second week of March. So if Dominion looks like that, then probably XLU is going to look very good as well, right? XLU being the utilities ETF. Yeah, you get a nice big inside bar week green, and so like we always do, we just simply draw our ranges. How to break outside of this range next week. Okay, so telling you right now, it looks like the money is still looking for safety. All right, so when you see things like XLU, staples popping up, people are buying drug names, people are still looking for safety. Bonds, we saw the bond chart already closing in near its highs. So this is not a market that's yet, jumping back into the risk trade. Certainly a very cautious environment right now. People are kind of on pins and needles, waiting to see if there's going to be another shoot that drops. Okay, so again, a slightly longer video. I gave a lot of commentary this week. Hope it helps. If you have any names you want to add to the analysis, just drop me a line in the comment section. They're on our YouTube page or on the blog, tradingedge.org. As always, if you enjoyed these videos, please subscribe. Click on the big like button first, that is, and then subscribe on YouTube or join our newsletter, thetradingedge.org. You'll get notified when this video drops, and you'll also get the weekly newsletter that talks about what I'm looking at and things that are interesting to me. As always, I wish you a really good trading week. Make sure once again that that you're respecting the volatility. If you are comfortable with this environment, then this is a great trading environment to be trading. If you're not comfortable with the volatility, nothing wrong with sizing back a bit and waiting things to play out a little bit longer to getting back to periods where maybe your method or your comfort level is more suited. All right, so once again, thanks for watching and see you next week. Happy trading.